Good morning. Mark Soderberg with ADM Investor Services with your morning ag market outlook for Tuesday, January 7th. Well, prices across the ag space are mostly lower here in overnight trade. Corn right now is down about 2 to 3 cents. Soybean complex is mixed, down 7 to 10 right now in the soybean market. Meal is backed up about $5 to $6 per ton. Well, a little bit of a rebound here in oil. That is currently 15 to 20 higher. In mixed trade in the wheat, steady to lower in Chicago. Looking about 1 to 3 higher in both Minneapolis and in Kansas City. CFTC data yesterday after the close did show that money managers were buyers across the ag space last week, and the period ended December 31st. The exception being soybean meal, where they were net sellers of about 9,000 contracts, extending their short position to roughly 29,000 contracts. In corn, there were net buyers of about 68,000 contracts. This extended their long position to a two-year high at 229,000 contracts. In total, the speculative traders remain long corn, short wheat, short the soybean complex, while also long the livestock sector. They are sitting on a record long position in feeder cattle. Really little change in the South American weather. Hot, dry conditions stretch from central Argentina into southern Brazil. This lasting for likely another at least 7 to 10 days. The extended outlook does offer some better prospects for rain in these drier areas near the end of week 2. Exactly how these rains spread out the second half of January and beyond will go a long way at determining price direction really for the next several months. Conditions across central and northern Brazil do remain mostly favorable as farmers begin to gear up for a harvest by mid to late January. FOB basis levels in Brazil have slipped to roughly 10 cents under the board price for this March-April timeframe. However, that's still well below where we bottomed out last year at about 50 to 60 under the board price. Several states here in the U.S. have provided updates on winter wheat crop conditions yesterday after the close. We did see a pretty sizable drop in conditions in Kansas, where 47% of the crop is rated good to excellent, down from 55% at the end of November. However, it's still slightly better than where we were a year ago. Thursday, we do have an abbreviated trading session in observance of President Carter's memorial service. Markets will close an hour early at 12:15 Central. Also, weekly export sales will be delayed until Friday. Also on Friday, we get a major USDA report, which features final corn and soybean production from last year's crops here in the U.S. We also get December 1st stocks, our monthly WASD data, along with the USDA's first look at winter wheat acres here in 2025. I'll go over these expectations tomorrow and in today's written commentary. Inside trade overnight in March corn. Yesterday, prices did trade above the 460 level for the first time in 6 months before drifting back a touch into the close. I do look for U.S. stocks to drop on Friday due to slightly lower production and slightly higher usage. So look for pretty good support below the market here above the 425 level, upside target of 470. If rains across central Brazil delay soybean harvest, that will have an impact on delaying the second corn plantings there in Brazil. After rebounding 65 cents off the lows from December due to dryness here in Argentina, March beans are starting to pull back here under the weight of the oncoming harvest in Brazil. If rains do return by late January, I do look for a retest of the 950 price level. March oil continues to consolidate between 39.50 and 41 cents. March meal has fallen back to retest key moving average below the market and the $300 level. And wheat looks to be catching a little bit of recovery on the lower ratings. Well, it looks like Jordan did purchase about 60,000 tons of wheat in their recent tender. So thank you for listening, everyone, and I hope you have a wonderful day.